everybody? Welcome to your Friday edition. I forgot to turn my light on. Hold on a second. We got to turn our light on over here. There we go. Get that light going. A little bit better color over here. Happy Friday, everybody. Hope you had a great week. You noticed the nice new threads. A big shout out to Katut, who works with a company called Bali. He sent me two really badass shirts. I got to say, actually three. I love them, so I figured I'd give them a little plug, and I will show you their website. Why not? So here, oops, that's not Bali. All my numbers moved today. Gotta love this. There we go. So here's Bali, catbali.com. I'm actually a big fan of Indonesian type prints. If you got a loved one, these are some pretty cool looking stuff over here. But nice tropical vibes. Summertime might be gone for most of us, but I will be wearing my Bali shirt out tonight proudly. So Katut, thank you so much for that. Again, you guys can find more information by going to capbali.com or Twitter. It's at capbali, and I'll show you the next one I have on. Apparently David Warner got one too, so we're going to have a shirt off one of these days here soon. That said, I hope you guys had a great trading week. Wasn't not the most eventful for me. It felt like ups, downs, and pretty much ending the week. I had slight gains this week, but not enough to really write home about. That said, I'm still going to have a nice glass of whiskey, so cheers to everybody out there. Oh, thank you. You know what? It's so funny. You guys mentioned the webinar today. I was so busy with so many other topics, I completely forgot to promote that symposium on today's show. So let me take a drink before I throw myself under the bus here. Irish whiskey today. Love it. So the symposium today, if some of you guys caught it, a lot of fun. You had Tom Joyce, Craig Weil, Michael Young. We had Sean Doyle, and who else was in there? Bob Dunn, and myself, hosted by Gregory Theonis. It was actually a lot of fun. I always love hanging out with those guys. As you know, I'm a retail trader, but anytime I have the opportunity to hang out with those old guys from Chicago, again, the real floor traders, not the clerks and order takers, I love it because I can just kind of pick their brains and see what was going on with them. And I like to learn from the behavioral analysis side of things. It's interesting to see that the way that they traded is so different than the way that we trade at a high level. But foundationally, it's still the same basic foundation of risk management and discipline. So yeah, it was so much fun. Those guys are great. It's unfortunate that there has to be kind of, let's just say, guardrails put in because of regulators and things with regards to what we can say. For example, we could not say anything like this in the seminar. You couldn't say anything like, well, I stood next to this guy, and this guy on one trade made $1 million. You can't say that now because regulators believe, well, that's not average. You can only say results that is indicative of what the average person might get. I'm like, I think everybody understands that those people on the floor have this tremendous advantage. A, you can't do what they do anymore. You wouldn't have that opportunity. And B, are you going to expect to be making millions of dollars on a trade? Probably not, although some people do, and then they're the ones who complain to regulators because you told a story about somebody that was making millions of bucks. And I brought this book up. It's funny. So I can't mention a story, and again, this is in the confines with OTA because of regulators. I can't say anything like, oh, well, I made X or I made Y or I made Z. Nope, doesn't matter if you actually made it or not. You can't say it because it's not reasonable to assume that the average person can make it. To me, it's just idiocracy on the part of regulators, but it's what we have to deal with. So, you have to reference books like this. There's stories in a book written by somebody else that outline people making tons of money, but I can't talk about them making money because it would make me look bad, right? Wow, what just happened to my camera? Look at that. Maybe it's time to get a new camera. Les, thank you so much for the $5 there. I think I'm gonna have to get a new camera. I look like I'm sunburned so bad right now. Ooh, it's cold in here, guys. I'm burning up. How much was the typical floor trade, Catherine? It all depends on the individual. Let me try to reset my camera. This is ridiculous. All right, that's a little better. Some people were what were called locals, which were generally, and I say this because it's lumping everything in one category, it was generally a smaller person. So they're not going to be trading with millions. Usually a local was somebody who came in off the street, maybe knew somebody had an in, and they just kind of stood there and traded on the floor. Then you have other people, and those are generally going to be, people maybe with a few $100,000, maybe a couple million. But then you, I look better with the light out. Thanks, Rob. I appreciate that. And then you have other people who were working for institutions who had, tens of millions of dollars behind them. And, what could you deem to be the average result? Well, when I listen to Bob Dunn or Michael Young or Craig Weil, these guys speaking, I'm not glued into the fact that people made money. I think we all know that there's some people making huge amounts of money. There's some people who are losing everything, right? And it all comes back to risk management. And when you look at that, I guess dichotomy would be the right word. When you have one extreme of people who are just making hundreds of millions of dollars, then you have other people who are making nothing, if not losing everything. Where's that balance between, or what's the common denominator that helped one person become the multimillionaire and the other person become a loser? It's simple. It's just simple stop losses and risk management. I mean, it doesn't get much easier than that. It's so plain and simple. It's just hard for people to apply that. And I think that, in these floor trading situations, a lot of them had stop losses and said, yeah, this is enough, I'm out. Remember, they also had a huge advantage when they were on that floor. They could look to their left and they would know who players were. So, we are, for all intents and purposes, this group here. Imagine we're a small group of floor traders, right? We're the, I don't know what you want to call it. We're the Bali shirt pit, right? So we're out there trading Balinese shirts. Well, I get to know you guys all the time. And I know that Les Gold, he's the heavy hitter. He's a buyer for a huge textile firm. Well, if I'm making money off the price of those shirts, I'm using shirts as our commodity here, and I know Les Gold is the heavy hitter, and I know that James Taylor here is a big guy too. Catherine, she's kind of a smaller local trader, right? She doesn't trade really big. Who am I focusing on? Well, I'm focusing on Les because he's the one with the big money. So if all of a sudden I see Les, somebody chatting in his ear, and Les gets excited to start riding, my eyes are all on Les because he's the one going to move that market, not me. And that's the advantage these floor traders had. And it's so cool to see them talk about the stories. And for those that were in there today, Bob Dunn was telling just a hilarious one. And Bob Dunn's such a goofball. He's so fun. Love him. But he was talking about this one where he would get bored, and he said he wouldn't spit your gum on the floor because that was just gross and rude. What he would do is he would take it with the ordered papers and put his gum in there and smush it and then pull it apart so it was like the gum was all stretched out, and then he would throw it on the ground like a landmine. I'm like, well, what's the difference in just spitting it on the ground? He goes, oh, it's like a trap, and I would take the over-under, see who would step on it. Like, oh, you had a lot of work to do on that trading floor, really, Bob. But I like stuff like that. I think it's just kind of fun to see that experience. When I was younger, I remember the movie Trading Places, which many of you probably remember as well. And that was, it was eye-opening. Is it really like that? And to some extent, it was, and no longer is that way anymore. Yeah, his minds, right, Lee? So funny when he's talking about that one. I just shake my head with Bob Dunn sometimes. He cracks me up. But anyway, if you have the opportunity, if you are an Online Trading Academy graduate, you can go into my OTA. It should be up there. I think it's supposed to be up tonight. I don't know what time it'll be up, but they'll upload it and be on the my OTA site. So where Big Ed was asking me, did I close out my put contracts? I closed out 50% of them. My plan was to get rid of all of them, and the way we kind of trolled over there, I was like, nah. But I got a half of S&P and my NASDAQ, and I am up, but ever so slightly. It's like I basically made a little bit plus commissions. That move over the last couple of days kind of took a big chunk of it out, but it's all right. I'm fine with it. A little disappointed. I really, that move kind of surprised me this week. I'll show you. Not that one. Let me go and show you. Everything moved. There we go. This is what I want to show you. So let's walk through and go through our top 7 markets here, at least to show you from the daily what happened for the week. I called it a tumultuous week with not a lot of end result action. The only one that really had good end result action was crude oil. I mean, crude oil has been pretty much up all week. Looked great. Again, ripped out of that purple box. So, it's a bullish side. I'm surprised that it made it up there and made it through, but here we go. Breakout with crude oil for the week. It was one of your best performers. Bitcoin also actually having a great week except for the last 2 days. And right now, for those of you who are in the crypto space, just in the last half hour or so, there's been a pretty sharp drop in most of the cryptos. Who knows what news is driving that. But it's a pretty sharp drop. Just happened recently, and I can show you that here by going into this 15-minute. Boom. One big candle, but not the end of all, but it just all of a sudden real quick came in on Bitcoin. All in all, that said, Bitcoin and most cryptos had a very good week with regards to overall net returns. I don't have the numbers here in front of me, but it looked great. The Dow, which I don't usually follow, oops, there's your Dow. Same thing. We really had 3 days, brought it out from pretty much dead lows. S&P 500 was down just slightly today, which allowed me to get a little bit of profit on closing on half my puts, which was quite a bit. And, right for that one, I had 40, and I closed out 20 of them. So I still have 20 puts on the S&P. Next Friday is my absolute drop dead deadline given the time to expiration, which is going to be the third week of November. Gold on the day, actually silver and gold both had this great chart. There was this gigantic green candle here for a while and all of a sudden just gave it up during the trading session, which was kind of interesting. You look at the 15, you can see a big spike and then just came ripping back down on the remainder of the session, just stuck there. SLV was pretty much the same chart. As you guys know, I am still long a considerable amount of SLV. I have been selling calls against that, which is fine. My strike price for the cover calls is $21.50, so I hope by Friday we close. I'd love it if we close at $21.49 would be my ideal for next week's Friday close. Let's see if we get there. And keep moving down that list so we get through at least our top few market indexes here. That's the hourly. Go back to our daily. NASDAQ. All right, so NASDAQ was the real surprise, the way it ripped out earlier on Tuesday's session. Tuesday, Wednesday, and Thursday rippers, and today gave back a little bit of those gains. But all in all, a decent week for the NASDAQ, even though it's still in this downtrend going back into early September. And lastly, no, the song remains the same here for Russell 2000. You can see it just chopped sideways yet again. And actually, this is one of those interesting patterns that some people will call a pennant formation. Some call it a symmetrical triangle. Bottom line is, it has been unable to really show any strength up or down. Now, if you want to go through the bodies, we can do it a different line. You want to go through the tails, doesn't matter. It's the overall picture on this one. And let's see, we'll just, since we did tails there, we'll do tails here. So you have this kind of compression of price, lower highs, higher lows. At some point, this will break. And the question is, when the Russell finally does break out of this small channeling, does it just rip up to the highs where it was and stay within this range? I mean, it's very rare to see that type of sideways consolidation in an index for this long a period of time. In another couple months, it'll be a full year, almost a full year before we just go totally sideways in the Russell, which is kind of surprising for me. NJ, again, thank you so much for all your contributions as well. I guess I got to have my camera break more often so the donations roll in. Nothing new in that yellow box, right, Walter? It's like just song remains the same. It's this spread trader's dream. You know, it's funny because Larry does spreads on the Russell that he does for his XLT. I think he does it every Saturday now, where it's just been the same thing every week, just boom, 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 boom. I mean, this is a pretty amazing chart, honestly. It's funny because the average person goes, this thing sucks, it's boring, who cares? But for someone who's a spread trader or just trading ranges, this is beautiful. This is the goose laying that golden egg. You do think it did that on gold? You do think it did that on gold? You do think it did that on GLD? Oh, let's go GLD. All right. So the only difference with GLD is you don't have the pre-market, right? So what happens is the futures market was rallying up on gold. When the markets opened, that's when it all of a sudden cratered, right? So it came back down. So that's why it has this weird looking gap up on GLD. But if we look at gold futures, that gap goes away. And it just showed the tail and came ripping back down. So it's, again, this is one of those things where it really depends on what kind of charts you like to look at. We talked with Jerry Baldwin about looking at the .D charts, which means you're just looking at regular market hours. So there's a way that you can take your futures contracts, make them .Ds, and they will now just show you the regular market hours. But I think you should look at them all the way back to all the time, even the 24-hour clock. Now, again, we had that conversation about, does it make sense? Is it more volatile? Do those levels in the Globex mean anything? Not really, but I still want to look at them, right? Let's look at those cat balls, $20 for each, right? And Walter, I mean, I feel like I'm almost being a poster child for it right now. These shirts, it is unbelievably comfortable. It is so comfortable. I feel like right now I should be out on the beach with a cocktail in my hand, and I don't even need just shorts in this shirt. I'm good to go. I got to go to Thailand. I got to go to Thailand, got to go to Bali, got to go to Southeast Asia again. I'm on it, Katut. Thank you. This shirt's hot. How do these shirts run in sizes? This is a large. It's a hair big on me, so they're actually like US sizes. It's funny because if you go to China, I bought some clothes from China, and I'm an XL. I'm a small guy for those who don't know. I'm 5'8", 165, so not a broad shoulder, big buff kind of guy. So I think if I got a medium, it might have been a little snug. This is just really comfortable and loose. So there you go. It's a real nice shirt. I'm pretty impressed. A lot of times when you get when you buy shirts, especially like I spend a lot of time in Thailand, and you go and you look at shirts, a lot of time you can tell they're crap quality. Like the stitching's bad, the buttons are bad. It's just you can see all the imperfections. This one, I haven't found an imperfection on it, so I'm actually very, very happy. So thank you, Katit. It's awesome. Love it. Let's see. Our topic was on crypto yesterday, and I picked up a small position on Riot. Today I was going to load up Big Sin. What are your thoughts on it? Okay, so Riot. So the SEC just approved a Bitcoin ETF. Now everyone's raving about this thing and talking about it. I didn't even really look it up at all, but let me see. SEC. So they basically allowed an ETF. It's not a Bitcoin ETF though. It's in companies that are in Bitcoin. So it's kind of like Riot blockchain, that type of thing, right? So it's not that big of a deal. It'll have Riot blockchain and Marathon. So it's nice to see something like that, but oh man, what's it called? It's called the Volt Crypto Industry Revolution Fund. So let me get the ticker symbol for you. Volt Crypto Industry Revolution Fund. Ticker symbol is BTCR, right? So who knows if it's even up and running? BTCR. Yeah, there you go. You got nothing. So maybe it's not out yet. They just approved it. It hasn't been released yet. So what will happen with this? Look, to me, this is no big deal. This doesn't matter personally, but what it will impact is the holdings of it. So if you look at the holdings of this, it's going to have things that are involved in the crypto space, like Riot Blockchain, Marathon, and that might help you in your positions, right? RIOT. So there's your Riot Blockchain. Right now, not looking so great, right? It looks pretty flat. You've got Mara is another one that's in that space. This ETF is going to end up buying shares of these companies as well as others. And of course, you could go dig deep, I guess, and look for the holdings of that Volt Crypto Industry Revolution Fund. That might help out your long. But again, if you look at Riot, was it a buy? You know, and Charles, you're gonna hate me, but you know, at this point, it's not a buy. I know you bought some. I don't know if I would load up on it, right? What's it doing right now? It's going sideways. You've got down day, up, down day, up, down day, up. I mean, it's this repeating pattern. It doesn't look really good technically. So what I would do if I was thinking about buying Riot Blockchain, it's real simple. You just set parameters and you say, you know, if it gets above a certain level, a threshold. And to me, it'd have to get above, let's say, 37 or 27.30. If it gets out of there, it's still not out of the woods. I mean, to me, a close above 28 would now mean it's starting to turn. It's starting to make some highs. So I would feel more comfortable about that. But right now, does this look like it has a lot of opportunity? Not really. Not really. You take a big risk also by buying individual securities like this. You know, these Riot blockchain and these miners, they can be dangerous. You know, there's going to be challenges for miners going forward, simply because a lot of people now are going to be moving to the U.S. and there might be more mining outfits coming online, which could create more competition for Riot and Marathon and others. So. No, I didn't, Rob. I haven't even looked at that thing. VIH, that dog. Yeah, I mean, it's just been stuck at $10. This thing. It's funny because they've been calling me to do if you are a shareholder of it, they call you up and they're asking for to vote for the board of directors. So it's one of the few times I'm actually looking at the issues to vote for VPC Impact Acquisition Holdings, just to put the right people in there and vote on it. But yeah, don't like it. Not a fan anymore. Sell puts at 23.24 if you want to get on Riot. Oh yeah, and that's another good point. So we talked about that on many shows in the past. So was it Chaus? Yeah, Chowski. You know, you could be using options, and if you look at your Riot, if the liquidity is good enough, you know, why buy it now if it looks like it's dropping? You know, maybe you sell some puts. That way you can own it if it drops down here and collect some premium. But if it goes sideways, you know, no big deal. I would maybe see what the premium is there, but it doesn't look that exciting. It doesn't look like a great opportunity right now. Again, it might pop, but I just don't see the price chart telling me that that's going to be moving. All right. Let me watch. I can make. Yeah, right. It's rayon. The shirt's rayon, so I don't think it will shrink like you think it might do. What else did I have for you guys? We talked about the tip charges yesterday. One of the topics I want to talk about was the debt ceiling. This obviously is a pretty important topic for those that maybe have followed along. You can hear that there was a vote, 50-48, which is like, come on, really? You guys couldn't be more on one side or the other. So just barely passed or they said they're going to kick the can down the road, which is why I picked that graphic up there. I figured it was kind of a silly picture, but the debt, nothing was resolved. They basically increased the debt ceiling by $480 billion. And what's interesting is if we get down to the end of the year, right around the second week of December, that's when the dude is supposed to hit the fan yet again. So thank you, the politicians, for creating yet another debt ceiling issue right around Christmas time and the holiday season when you guys are supposed to be on vacation. Kind of nice that they'll probably not come to a resolution before they go on their winter holiday, their Christmas holiday. Mike asked, what is the name of the Bitcoin ETF? Remember, it's not a Bitcoin ETF. They're saying it's a Bitcoin ETF. It's not. It's a Bitcoin-centric companies. So it's not a Bitcoin ETF. There's still a dozen of those in the works, which I think will happen this month. But the ETF that the SEC approved was one called the Volt Crypto Industry Revolution. It's the BTCR. And that's basically a tech ETF that's going to represent companies who are involved in the Bitcoin space, but not actually Bitcoin. And from my understanding, one of the major holdings in that will be MicroStrategy, which of course you guys know. MicroStrategy is pretty much a proxy for Bitcoin because it holds so much of it. MSTR. And there's your MicroStrategy. Only at $700 right now, well off its all-time highs of $1,300, but looking nice now. And I guess this guy just keeps on buying Bitcoin. It's everything he can do, he's buying Bitcoin. Michael Saylor is the gentleman's name. Exactly. They just kick that can down the road even further, and it's just kind of frustrating that they push it right before the holidays, right? That's when usually it's more dangerous, in my opinion, to do it around the holidays. Why? Because a lot of people start to leave town around Christmas, right? They move off the trading floors, they go on vacation, so all of a sudden liquidity starts to dry up. So what can happen is those swings, if there is indecision, I mean, you guys saw how big the swings were this week. They were, given our normal markets, this was a pretty volatile week that happened. And that was just because of debt ceiling in a fully liquid marketplace. If come around Christmas time, those markets might have half the liquidity, and all of a sudden we start to see some real, 3, 4, 5% days up or down. Who knows which way it's going to go, but that volatility could create some great trading opportunities. I may have to trade the holidays. Normally I don't like trading over Christmas or Thanksgiving, but given that volatility, how can I say no? I agree, Lee. It's obnoxious. It's so unnecessary. It's ridiculous. It's stupid, but it is what it is. It's this never-ending soap opera that just keeps on going on and on and on and on and on. So it's unfortunate. Debt ceiling, the nightmare. It should be like a serial killer kind of movie, right? The debt ceiling. Read. All right. What else do you guys want to talk about? I really didn't have too much on the plate for today because I've been in this workshop since 7 a.m., the symposium, so I really haven't had a lot of stuff to look at. All I did was basically jump off real quick and get out of some positions. Anything of interest out there that you guys want to talk about? Try the green cotton shirts. I got some in Thailand a while back. Best cotton, best feel. Yeah, well, I love, and one thing I love for Thailand is you can find so many varying degrees of quality, so I love shopping around for that, but this one, I'm loving this one. This thing feels so good. It's just a great shirt. Let me see if I had questions that maybe I didn't get to yesterday's show. Should we talk about that one? I got some training. All right, Tom's here with us today, so I'm going to bring this one up, and it's kind of a tricky one, and that is this. I heard mention of Scorpion Capital via an options trading forum. Yesterday, Scorpion has a good track record for finding frauds. Today, they announced their latest, just for fun. I took 2 November puts on DNA. All right, so let's look at the chart of DNA here, and then I'll give my 2 cents on these types of companies. So your puts were looking scary yesterday and follow through today. Right, so these are activist short sellers, and there's a bunch of different groups out there. I actually used to follow this type of thing quite a bit. So the one, and this was one that was in the late 90s, so I apologize, I can't remember the name of it, but there was a guy that ran this group, and he was like a hardcore activist short seller. So he would find a company and do all kinds of research on it and then just use every means to his disposal to slander and slam this company. And come to find out, a couple of the ones that he went after were legit companies just starting up and had bad financials, and he was just slamming them. So part of me kind of felt bad because I was following this guy and going short. I made a little bit of money off him, but then if you're short and that company actually does do what they say they're going to do, apart from whatever his claims are, then all of a sudden you're facing a very tough situation because you could get short squeezed out of them. So I tend to shy away from those That's just me personally. If there's opportunity in there for you, do it. DNA, you guys know my take on it. For a chart like this, I don't think it has enough history really to make a decision. Whether I want to be going long or short, it just seems too new and I don't know anything about it. So I personally wouldn't do that kind of thing. It's just a little too risky for me. But hey, everybody has the opportunity to go out there and do what they want with regards to markets. That's the beauty. There's so much available from short term to long term to micro cap to mega cap. I mean, do what you like. In this point, if your guy was right and his analysis is right, Tom, then yeah, you'll probably see this one drift down. But boy, if he's wrong, or if he's just pumping, or his agency's pumping this thing to the south side, then you might get that short squeeze, which could create a monster pop here. And who knows? Maybe that's what happened back here. I don't know. Maybe this was part short squeeze. Not sure. The chart sure looks ugly as hell, though, right? But there's a lot of different groups out there that do this. I generally don't follow them, but there's power in group psychology, or group what do they call it? Foment. So Jim Cramer talked about this in his infamous interview that he did talking about hedge funds, and he says it's illegal for someone to foment, to create a fake impression about something. Well, look, it happens all the time. It happens all the time. No issues there. It's just as the SEC catch it. So fomenting to me is a commonplace in the market where the news, the media, the publications, all that are out there trying to create an opinion about something, which is why I always try to do my own research. And, if I'm wrong, I'm wrong. I'm okay with that. But I'd rather be wrong because of my own doing rather than be wrong for somebody else's actions and their influence on me. So, I guess just be careful out there with that. You could get burned with these ones, but a chart like this does not look good to me either way. I wouldn't say go long or short this one. It just looks crazy. Maybe once it settles, but right now, no. Tesla, BPTRX holds SpaceX. What's your thoughts? Well, let's go to BPTRX. So I'll do a couple different things. You sure it's BPTRX? Because I'm not seeing any ticker symbol for that one. That one's not coming out for me. BPTRX. I got the right ticker symbol in there. All right. Well, you have to give me some clarity on BPTRX. No, that one I don't know. What else do I have here? I had a question which was on tax forms, which I thought was kind of interesting. I don't really, with regards to trading taxation, I'm declared a trader, so there's a couple different qualifications. If you're a trade tax declared as a trader, then you have special kind of tax permissions. Wash sale rules don't apply, etc. So there were questions on wash sale rules, and are there wash sale rules on options? Yes, there are wash sale rules on options. And for those that don't know, wash sale was a measure put in place because what happens is, let's say you've got a bunch of gains in a portfolio. Let's say you got $10,000 worth of gains, and in one of your positions, you're losing $10,000. And let's say it's a tech stock, semiconductor. We'll call it, let's just make it up, Intel. So you're down $10,000 in Intel. Well, if you keep that Intel, you would have to pay taxes on all those $10,000 worth of gains in your other portfolio. So what the people would do is they would sell their Intel for a $10,000 loss, offset all those gains, and then they would buy right back into Intel. And that's called a wash sale. They don't want you to do that. So people are thinking, well, I could just buy some calls on Intel. It's considered a reasonably like security, and that's the gray areas. What is the reasonable like definition, right? So if you sold Intel and claimed the loss and then immediately bought Intel options, it's still the same thing in the eyes of the IRS, and that would be wash sale. They wouldn't count it. You wouldn't be able to take that loss on the Intel shares, and you have to pay taxes on the full gains. It does happen with options, so it's something you need to be careful with. Certainly talk to your CPA about it, but if it's equity options, there's definitely the potential for wash sale. So if you sold Microsoft and then you bought Microsoft calls, wash sale rule will go into effect unless you're a trader, declared as a trader in securities. Oh, it's a Barron's fund? I can't pull it up on this one, so unfortunately I don't have that one for you guys. Let's see, what else do I have here? There was a question asking about Grayscale funds. Grayscale, for those who don't know, has a whole library of funds coming out right now. Personally, I'm not interested in any of them until we have ETFs. So let me just bring up the list here. Grayscale. Until we have an ETF, I really don't want to. I'm not interested in it. Of course, you guys know I am more into the physical anyway. I've got a pretty substantial portfolio of cryptocurrencies, so I don't really need to worry about the Grayscale side of things. But if you look at their investment products, they have some pretty unique ones. I'll bring the page up here so you guys can check it out. It's a way for you to access these crypto markets, which I'm sure a lot of people want to do. Great. You go here to single products, which is single asset, and this is where you can focus on a specific cryptocurrency. So like there's Bitcoin, Bitcoin Cash, Ethereum, Decentraland, which is Mana. That's an interesting one. Chainlink. All right, Chainlink is in my portfolio. I have Ethereum, Filecoin, Horizon Trust, and a few others here. Stellar Lumens, LivePeer, Litecoin. I mean, very interesting to see all the different ones they have. And Zcash, which is more of a privacy coin like Monero. You could buy into these trusts, but after seeing how weird they traded, and Tom, you sent a great video over. Maybe if I could find that one, I would share with everybody by the Lynn Alden comments on why that thing was so out of balance. I personally would just stay away from them. If you go to here and you do, let's see, let's go look at the Chainlink one, since I like Chainlink. So let's see, Chainlink is going to be, what's this ticker symbol on that? Is going to be, I'm trying to remember off the top of my head what that ticker symbol for Chainlink's ETF was. Let's see. I don't think I'm going to get it. I don't remember the nope. And link. We go here and you go into let me see if I can do it from Grayscale. So Grayscale, I'll click on all, and that should give me a list of all their different products out there. Boom. Nope, nada. So for whatever reason, I'm not pulling them up, but generally there's a weird lag, and we saw that with Bitcoin, the premiums. I actually have subsequently removed it. DNA, you were forcing me to be attentive today. Not really, Tom, because I'm not even going into them. It's like ever since we found that weird little glitch going on with the GBTC, notice I've removed it from my list. Like I didn't even want to look at it anymore. That just seemed weird and broken. So I've removed that piece for that one reason. It just seemed weird. It used to be good for day trading. Sure, day trading, but as a long-term hold, because remember, there was showing that there was either a huge premium or a huge discount being paid. And at one point, it was like nothing but premium, and then all of a sudden, it got stuck in a mode where it was nothing but at a discount. You're like, well, okay, I'll just buy it then. And the discount kept getting bigger and bigger and bigger and bigger. So I don't know. Something's broken with that one. I'm off. I'm out. I want the ETF. If it's an ETF that has Bitcoin futures in it exclusively, cool, I'm happy with that. Walter says, I have a margin account with under 25,000 and want to start day trading stocks. Can you elaborate on what pattern day trader is and the limitations? Yeah, if you're under 25,000, you're kind of screwed. Here's why. Pattern day trader requires, if you're going to make 4 or more round-trip trades in a 5-day period, a rolling 5-day period, then you have to have over $25,000. So if you bought a security on Monday and sold it on Tuesday, that's a round-trip trade. If you do that I think it's 4 or more times, they'll freeze your account until you put over $25,000 in. It's kind of a weird way to force people to have more money in their account. It was designed to be a risk management measure for what was going on back in the late 90s. To me, those days are kind of gone. I think it should be fine. I mean, look, you can open a spot Forex account with $500 and get 100 to 1 leverage in certain parts of the world. So why can't I get a little more margin and be more active if I choose to? It was just trying to protect people. So the challenge there is, as soon as you go down to $29,999 and you make more than 4 round trip trades, your account will be frozen. That's just a rule in place. So, what I would recommend would be more, let's look at, if you have that kind of account, I would study the underlier. I would study how stocks operate and how they move and target my zone, supply, demand, whatever strategy I want to implement, and then I would look at the options market. So what that's going to do is a couple of different things. Number one is it's going to be a more efficient use of your capital. So you won't be putting as much money on the line. You can be a much better risk manager, I feel, with options as well, because you can buy, smaller increments. You also, I guess you're also more attentive to what the underliers are doing, and you filter those out because there's not options for everything out there, right? A lot of little stuff's not going to have options. Well, no options, I'm not going to analyze it. So I think it's going to make you focus your attention on the highly liquid securities, which is generally how I'd recommend people start anyway, is start off with more liquid securities so you have that volume liquidity cushion. Can we do a show on psychology? Yeah, absolutely. We actually had Dr. Woody Johnson in the program. I love the topic. I think psychology, that's what trading is all about. The problem is a lot of people get bored with it. Like, oh, I don't need this therapy, right? Well, I think we all do. I think everybody needs to understand the psychology. But Walter, Rob, if you want to throw out a question relating to psychology, throw it out there. I'm not a very arrogant person. I'm a psychology expert when it comes to trading. I have mastered it. I've been beaten up, tossed around so much. I know what goes on in my head on a regular basis. So if there's something that you want me to go over, Rob, with regards to psychology, let me know. Yeah, I've had the opportunity to work with Dr. Woody for many years, and I've learned so much from him. Oh, did I? Thanks, Big Eb. It's one of those days, man. I'm tired. Let's go try this. There you go. Thank you. I mentioned I typed in gray, G-R-E-Y. It's supposed to be G-R-A-Y. So these are all the different ones that you could trade. What I like about this, it really shows how this decentralized marketplace is kind of changing. So, for example, you guys see you've got Grayscale, Bitcoin Trust, Ethereum, Litecoin. So these are all the ones we just mentioned, right? Then you look down here, and then you have FTX. So FTX has those as well. You can trade them through FTX, which is a decentralized cryptocurrency exchange, and also with those, you probably get more leverage. You can get, I think it's 10-to-1 leverage on 50-to-1 leverage on FTX, depending on the instrument. So this is decentralized cryptocurrency, guys, starting to creep their way into our markets. It's kind of nice you can trade all that stuff. All right, let's see. Chris Sereno. I bought some calls on GLD today. Are you midterm bullish on gold? I am. Just look at the chart. You know, I'm long-term bullish. Midterm, I feel like it's going sideways, right? I feel like we're in a situation where we've got this baseline established down here. I'm going to take this upper line off. And you can see it's kind of pushing down towards this baseline. Well, that 1673 mark is pretty important for me at this point, right? That's kind of the line in the sand where I'd say, you know, if you bought some calls, well, you know, that's your get out point, I think. It feels like it's been holding. It's been holding for better part of well over a year now. But it looks like it's been getting weaker, right? Just the lower highs. But the bottoms are remaining the same. So I'm all right with the calls. I certainly would feel more comfortable buying calls as it got down to 1673, somewhere in that range. Because right now, if you look at this where we are with this downtrend line, you're kind of right in the middle, right? So you don't have huge upside potential here. Maybe it comes back up to this trend line. That's my first target, would be this trend line. If you were long on those calls. But, still, if we're sitting right now at 1757, this trend line is right now, right around 1800, so 1810. Let's see, what do I got here? Can we just, so I'll get to your question in just a sec, Rob. I'm going to go down the list here. So if I could just stick with futures then, what if it's a cash account? If it's a cash account, that's a totally different story. Cash account, you only have your money. So in theory, you can make trades as much as you want in a cash account. But remember, let's say you have a $50,000 or $25,000 account, right? And you did a trade that was a total value of $10,000, that gets taken out. And you won't get that back right away. It's not like it's instantly there. The cash accounts generally have a multi-day settlement. It's called like T1 or T2. T1 means you get your money the next day. T2 means it's 2 days. T3 means it's 3 days. T0, which is what pattern day traders will get, is your money's available instantly. So cash accounts, there's generally a lag time in how quickly you can access that money. So that's one thing to pay attention to if you want to be very active. Chris, hopefully that answered your question on gold. I'm in that same boat with silver where it doesn't look good right now. It actually tiptoed right below this line the other day on me, and I was waiting until next Friday to get out. So we'll see how we end up. But right now I've got I'm sold the 140 call. Oops, I'm sorry, you don't see my chart. I've sold the 2150 calls against my position, which I have right now, dollar cost average. I think I'm in at $20.60 or something. So no, it's not like it's a huge gain, but I do have quite a bit of SLV right now. Let's see. What else do I got here? Walter, pattern day trader applies to buying and selling options contract. No, options are different. It's just equities. Just equities is the pattern day trader rules. Rob L., I think margin calls start at 9:30 a.m. every day. Can you explain if it affects the market movements at that night? I don't know, Rob. I mean, you know, how margin call, depending on what kind of margin call it is and when the delivery time of that margin call is, it certainly could impact. But is it going to impact that big? For example, you know, margin calls, it's not like people are going to be getting margin calls on $50 million where that's going to move the market. Generally what happens is margin calls are going to be people like you and me, right? Retail investors that just stretched ourselves too far. Normally, unless it's a monster move, these institutions, they have all kinds of risk management pieces in place. They're not going to get margin calls, and their selling pressure, that's the one that's going to move the market. So it's not something I really focus on. I mean, if you find something else out about it that might be more intriguing than that, let me know, but it's never been something I really focused on because to me, the institutions don't get margin calls like that. Let's see. Struggling to push the button, was watching MicroStrategy, saw... Well, let's see. You know, the good news for you, Rob, I'll read the questions. It's struggling to push the button, was watching MicroStrategy, saw the open on demand, and didn't do it. Okay. I guess the big thing is, with regards to psychology, you have to tell yourself a couple things. Number one, it's okay to be wrong, right? Number two, you're going to be wrong. And number three, I'm ready to be wrong. It sounds kind of weird. Like, why would I say those three things when you're saying, Merlin, you should be saying, I'm going to make money, I'm going to kill it, I'm going to crush it. Because when you say those things, you forget about the most important piece, which is losing money, right? And that's probably what's weighing on you the most right now, Rob, is I don't want to lose any money. You're going to lose money sometimes. It's like if I don't play the lotto, if I don't put out $20 to buy those tickets, I'll never win that lotto, right? It's a different kind of fear factor because I know the odds of me winning the lotto are impossible. In the financial markets, it's not impossible, right? It's just daunting because there's so much to think about. So what I would encourage you to do, Rob, whatever it is that you're looking to trade, if you have that plan, let's say you saw MicroStrategy, right? So let's bring up MSTR. Right? So you brought up MicroStrategy, which, you know, today ripping right up into supply. Right? It's actually a great shot right now into overhead supply. Right? So, you know, if you wanted to, you come out here and map out yourself a little yellow box just because I'm a dork and I like to do it. So we'll just throw something like that on there and you're like, all right, it came up into supply. Not the best supply zone, I will say, but it's not horrible. I've seen worse. All right, so if this is your setup and you're going, you know what, I'm just too afraid to go short on this one. Well, look, you've got an out. Your out's when it breaks above the high of this box. So your out's going to be 736.60, somewhere in that ballpark. And if your entry is as it comes into the zone, which let's say it's I don't know, making it up, 715, great. Well, that means you got about a $19 stop loss. Okay, now we just adjust. If you're too concerned about it, then you go short one share. That means you risk $19. Right? It's all about getting a position amount that you're comfortable with, but at a certain point you have to trust your analysis. Right? I get that there's that apprehension to pull the trigger. It happens to everybody out there, especially when you start trading with big share size. You know, when I remember my first 10,000 share trade. I mean, that's when it makes your butt pucker, man. 10,000 shares is a lot of money. So you just have to get comfortable and build yourself up to those kinds of levels. Start off small and say, okay, I'm going to risk $100 on this trade. And calculate out the reward, calculate out the risk, and know exactly how many shares and what price, and, you know, put your stop loss in there. If you're going to be going short this one, put a stop loss there. That way you don't have to worry about it. No, missed the... no, it's okay. It's fine. The point I'm getting at here is it's not about whether you missed a move or not. Look, I miss moves all the time. I miss them all the time, and I don't care. I could care less. I'd rather miss a move than force myself to be in one that's a crappy move or it goes against me, you know? You guys have seen on this program, I generally share my losing trades with you. I don't usually talk about my winning ones too much because to me there's no learning lessons in those. You just did what you're supposed to do, and maybe I could refine it a little bit better, but you gotta force yourself to do it, right? Don't struggle to push the button. Just write down on a piece of paper. I got my entry, my stop loss, my price target. Here's how much I'm going to risk on this trade. Here's the worst case scenario for me. You look at that and go, you know what? I'm willing to risk $100 to make 300. All right? Boom, done. I'll do it. And if you don't trust yourself, or you know you're not going to pull your stop loss when you should, then you put your stop loss in the system so the computer does it automatically. Then you don't have to worry about it, right? And as Walter says, it builds confidence too. Absolutely. The more you do it, the better you get. And again, start small. That's one thing I love about the micros. Nobody's going to make a lot of money on the micro futures contracts. However, if you are using the micros, you can get skin in the game, right, without risking getting hurt. I think I told you guys this story. I remember when my dad taught me how to drive. It was a Toyota 4x4 pickup with no power steering. Try steering a no power steering 4x4 truck. I mean, it was just like, oh my God. And I'm a small guy. It was brutal. He didn't take me out on the 405 right away and say, hey, let's rush hour traffic. Let's do 70. Right? That would have scared the hell out of me. But it's got me in a parking lot where there was nothing around, and you just try it. Try it with a few bucks. Right now, nobody has to pay commissions on stocks anymore. All right? Most places are free for stock. So buy a share. It's not about the money. It's about the experience and getting your confidence level up there. You'll get there. It just takes some time. Institutions just go broke like the movie Margin Call. Yeah, that's true. In market, let me be clear. I'm not saying that no institutions get margin calls. Just the difference is normally an institution won't be triggered on the retail markets, right? They might be doing orders between banks, orders between brokerage firms, and then reporting after the fact to the exchanges. So you and we're dealing directly to the quote-unquote open market. Others might be dealing with dark pools. They might be dealing with intra-institutional trading and transactions. So if I'm XYZ trading firm and I clear through, let's say, Bob's Brokers, and I get a margin call, I'll probably settle something with Bob's Brokers share-wise as opposed to go to the open market. It depends on what the situation is. But most times that won't have as dramatic of an impact unless we get a black swan type event where all of a sudden, markets drop 10% and people are caught off guard and boom, now stuff's getting liquidated all over the place. Start small and don't trade with scared money. Yep. Oh, wow, Rob. Holy cow. You don't need to do that. I appreciate that, Rob. Cheers, my friend. See, you pulled the trigger on that one. That's like a trade commission right there, buddy. Thank you so much. I appreciate that. It made my day. Today's plan is to go watch the Giants destroy the Dodgers with a buddy of mine, and then I'm going to ride electric bikes all around. So I'll make sure I wear the helmet after a couple of cocktails. Lost $1,000 on one trade. Once in a $20,000 account, and it was trembling all day. I couldn't trade for a couple of weeks. Yeah. On that note, here let me share one with you. What time we got? I'll share this story with you, which is a painful one. It's a very painful one. I may have shared it in the past, but it's one of those ones I like to recant because I feel like people can learn from it, and it was a brutal one for me. Like it's right now. This is painful talking about it. Right? It hurts. So. This was I want to say 2001. Cisco reported earnings, and this song was so bad I wrote a song about it. It's based off the song "Lodi" by Creedence Clearwater Revival. Let's see if I can remember. I wish I could play the Lodi song in the background. It's like just about a year ago, I bought me some Cisco. Paid nearly $40. I won't see that price no more. I ran out of time and money. It looks like my plan fell through. Oh no, I'm stuck in Cisco again. And then there's like 4 verses. What's the next verse is a good one. So, if I only had $1 for all the stupid things I've done, for every trade that got away and left me looking dumb, you know I'd write a trading plan and follow all my rules. Oh no, I'm stuck in Cisco again. So yes, sometimes you write songs about broken hearts. Mine is about a broken trading account. And sorry for the horrible voice. It must be the whiskey today. It's only my first glass. So the Cisco trade. Cisco came out with earnings, and they raised their forecast, and they beat earnings, and they were down huge. And I forget the number, but it dropped to like $17, I think is what the number was. And the market gapped down slightly. Cisco gapped down huge on great earnings and a raised forecast. And I was like, holy crap, I got to buy some of this, right? So I bought 1,000 shares of Cisco on the open. Boom, I'm in 17 grand worth. Now, I'm a pretty active trader. Market starts going up a little bit. Boom, I buy another 1,000. So I'm in 2,000 shares of Cisco now. Market keeps going up, drifts down a little bit, right? And Cisco starts to drop. At this point, I'm down about $500, maybe $800, no big deal. Then the market starts to rally again. I buy another 1,000 shares of Cisco. I kept buying shares of Cisco as it kept dropping and the market kept going up. By the end of the trading day, I was in 15,000 shares of Cisco. And I'm not making it up. This is true. I could probably find some trading statements somewhere. I'm not saying this to blow smoke up anybody's posterior. This is like a legit one. And I'm down about $15,000 on this trade. And the market's closing, and I'm like, it's going to come back tomorrow. I know it's going to come back tomorrow. And I'm trying to convince myself to stay in it. I know it's coming back tomorrow. I know it's coming back tomorrow. And finally, I was like, I can't do it because it could gap down another full point tomorrow, and I'll be down another $15,000. Now, nobody likes to lose $15,000. I mean, it was one of those things. It's like it's just gut wrenching, and the whole time I was doing the catatonic rock, which where you just sit in your chair and you're just like, oh no, oh god, oh god, oh god. And I was in Italy, So basically, the U.S. equity markets open over there at 2 p.m. So this was late. Like, I'm late at the office. Was it 2 p.m.? I think it's 2 p.m. So everybody's already gone, and people are like, goodbye, Merlin. I'm not even responding. I'm just like, I'm losing my mind. And I'm literally counting on 3, 2, hit market sell, and I just saw my trades splash on the time and sales, and it ended up being roughly a $16,000 loss in one day. Now, for some, that's not that big of a deal, but I am not a golden spoon kind of guy or silver spoon kind of guy. For me, money, it has value because I earned every friggin' penny of it. I was never given anything from my parents, etc. So it was on the walk home that day, I walked in front of the BMW dealership, and they had just bought the Fiat lines, or the Mini Cooper. So it was the Fiat Mini Cooper in the window, and it was 15,000 euros. And it was like, my brain started putting price tags on all the different pieces of the car, the tires and the hood and everything. I'm like, and I felt sick for about a month. It was a horrible, horrible experience. And it's those types of things that you can't have happen to you, right? And I'm sure, Rob and others, that's what you're afraid of. And you should be. You have it in your power to not let it happen. If you look at that trade I made on Cisco, I have 10 rules. It's actually written right over there next to where I trade. I got a little list of my 10 laws on my other trading computer. And I broke 8 of 10 laws that day. And that's why those rules are written. These are the rules to keep me from blowing my account. And again, if we have good risk management, none of that trade would have happened. I would have bought 1,000 shares of Cisco on the open. As soon as it dropped down to a $500 stop loss, I would have been out. Instead, it got to 500 and I went, dude, it's going to rally. I'm going to buy another 1,000, and now it just has to go up a quarter of a point, and I'm back to even. 25 cents, all I need to come back to even. So it's a huge psychological game, but those ones stick with you, and that one is one I've shared with people over the past because I think there's a great learning lesson in it, which is don't trust your security. You have to trust your rules. You have to trust your plan. At the end of the day, it was down. The sad part is the next day it was up big. Like, had I stayed in, I probably would have made about $45,000 if I kept it the next day, which is horrible because now my brain says next time, keep it. No, don't do it. It was already a colossal violation of all of my trading rules. You just got to get out of that stuff. Corey's looking for new singers. His kids are the singers now, not me. All right. Anyway, Rob, you'll be fine. Just pull the trigger on something. Do it on something that's small, that doesn't move very fast. I would not recommend MicroStrategy. MicroStrategy can have some pretty big swings out there. Oh, man. You guys are awesome. I'm going to go get hammered tonight off you. Thank you, Walter. Rob and others, you guys have been making my day with donations. I got shirts today. I got money today. Whoop, whoop. You're paying for my my upload fees so I can put the podcast up. I appreciate that. Thank you so much, Walter. Thank you, Rob. You guys, I really do appreciate it. Thank you, NJ and Les Gold as well for your contributions today. That really means a lot to me. Thank you. Well, let's tell us on how you got into trading. Okay, how much time we got? Oh, boy. The last sip of whiskey, and it's near the end of the show. So, it's really kind of two stories. Number one is, how did I get interested in it overall? My dad lived on Sonoma Mountain, and while he was building his house, he lived in a trailer. He was building this 3-story geodesic dome. Amazing house, but it took a while to build. So I would go up and visit. My parents were divorced, so I went and visited my dad, and he had this book in his, as kids, you dig through your parents' crap, especially when you got nothing else. I'm on a mountaintop, man. What the hell am I going to do? So I was going through this cabinets one day, and I found this book, and it said S&P Stock Guide. And I remember him explaining the basics to me, and I was like, okay, so these are companies, and you buy them, and they go up and down. And I knew the basics. And mind you, this is like 9 years old. So I paper traded for fun. Like, I'd pick a symbol, and then I would go down to the store and look at the newspaper. I'd go to, pull up the Wall Street Journal and see what it was trading at, just for fun. It kind of, it really just kind of, I don't know, it was something to pass the time, and I found it interesting. Fast forward many years, and now I'm in college, and 1996 is when I really got into it. And I was like, you know what, I want to take my money, and I want to grow my money. I'm tired of all my friends out here buying a bunch of crap they don't need. Like, oh, I'm going to buy myself a used car and put a $30,000 sound system in it. Okay, great. It's going to be worth nothing in 5 years, you idiot. I wanted to grow my money and have something to show for it down the road. So I really was like, I need to learn how to make more money with money. And that's when I just departed from my initial degree, which is engineering, and I went with finance. So I work for a financial planning firm, and the financial planning firm, I come to realize, is very self-interested. And it might be the one that I was with, that could be, or it might be the entire industry. And I believe that the industry is out for their own good. So if you are with a financial planning firm, their bottom line is, we need to make money for ourselves. If you make money in the process, that's great, but they have to make money for themselves. And some of the things that we were putting clients in, I just shake my head at and go, I would not have put clients in that. And also, oh, you're getting kickbacks from that fund. So let's say mutual fund companies would come to us and say, hey, we've got these mutual funds. If you sell X amount, we'll give you this. Right? So now all of a sudden, this firm has an interest to push another mutual fund that could have very high fees, might not have the greatest success track record. I don't know. I just found it kind of disheartening to see. So a friend of mine sent me an article about day trading in 1998. It was the cover of Forbes magazine. And I was fascinated by what I read, and I went to study school, see which schools were there that taught it. There was one in Irvine, one in Los Angeles, one in Irvine, one in New York, and one in Dallas. And of course, I live in California, so I went to Irvine and took the class. Or I took on a spring break. I took this, I don't know, tour of the floor, if you will. And mind you, they were doing some shady stuff to get me to sign up. I was kind of like, well, I don't know if I want to buy that. I went back and told all my professors, and every single one of my professors, hands down, said, it's a scam. Don't do it. Don't do it. It's a scam. You lose all your money. And I was like, I just don't think that you guys know the technology. You're old, antiquated professors. You know, you're used to, let's look at fundamentals and maybe go to the stock of the exchange floor and trade. I'm seeing screen-based trading, which is brand new. You know, now if you go back and look to what was going on in 1998, which people thought was a scam, it's commonplace. We all are transacting in tools that were called a scam back then. And I think crypto is kind of the same way. That's why I'm so excited. But that's how I got into it, Eric. I took a 1-month class with Online Trading Academy on June 1st of 1998. I exited that class feeling like I was the smartest guy in the world, thinking I would just crush Goldman Sachs. I won't tell you about my first trade I made out of the floor because that's going to be a fun chapter for my book. But the first few months were not good. Not good. I didn't have any rules. I didn't have any discipline. I was just caught up in the emotions and the hoopla of all the trading floor noise and sound. And, it was a pretty rough loss at the beginning. I didn't blow my account. A lot of people did. But I lost a lot of money. A lot of money. And that initial few months, let's say 6 months, was really bad. And then AL grabbed me and I started assisting an instructor. And then I became an instructor. And there you start to apply all the things that you learn. And to me, that really helps. And I would encourage all of you, if you're Online Trading Academy graduates, you should do as much as you can in the community. It helps you out, and it helps your community members out. So you might know something that somebody else doesn't. And when you educate or talk about it, it'll solidify those rules or those strategies, those tactics more concretely in your memory. So when I'm up here talking about stop losses and discipline and risk management, it forces me to be more adherent to stop losses as well. Who taught me at OTA? It was a gentleman named Fernando. Fernando. What should you ask him for next? E-bike, import, floor trade. All right. Well, you guys keep asking questions, Tom. I mean, hey. Oh, boy. Tell you what. Well, you want to talk about Nepal. Well, I could go off on that story. Jeez. Oh, look at that. You got me an hour. Congratulations. All right, that's going to do it for me. There's no earnings for Monday. By the way, next week, it all starts. There's only 55 companies reporting earnings next week, but, it gets good. It gets good. It gets good because on Wednesday, there's a mother load of financial firms reporting. So let's expect more volatility to increase next week as people now start pontificating or coming up with a hypothesis about earnings season and what financial firms might mean. Can I explain my all of that. I'm gonna go. Let's make it a 3-hour show today. I'm in Portland, or I have no. So Walter, I know that they do mastermind, and of course that's one way. There used to be a thing called what's that called? My God, I just drew a total blank. There was a portal that we used to use all the time to kind of have a community gathering. I'm drawing an absolute blank on that one, but maybe it ends up being that you have social media groups, Facebook or YouTube or something like that, where you guys can work with each other. And again, AL has done a lot. The guided pathway sessions, GPS, those things, the XLTs, those are all designed, obviously, to help you engage with others. Unfortunately, you know, those do come with a price tag, and for some that's a very hefty price tag. But you know, whatever, if you are paying for stuff, use it. We've seen a lot of people that pay for things like XLTs and Mastermind just don't fully use it. Immerse yourself, man. That's how you get better. Can I turn my camera to my wall with my 10 rules? No, my office is a mess right now. What I can do, I could get you the 10 rules, but maybe, I think I've already done a show on my 10 rules. I think I've done that one. But maybe in the future. Again, if we want, I think I removed it. I had my, this used to have my name on it, but again, I want to thank Cap Bali for my apparel. I kind of, there's some other ones in here. I'm going to show you a couple others just because I wanted to buy some of these. These are obviously women's. I'm not too big on wearing women's clothing, but some of the stuff is absolutely beautiful. I don't know if anybody's ever been. I like this type of shirt. Like, this type of stuff is funky for me. I love it. I will probably be buying a couple of these as well, but yeah, some very cool stuff. They have a really cool men's line. Anyway, Katut, thank you so much for this. I will probably be purchasing some more of these. Obviously, the guy shirts, the ones I'm looking at. I actually have one that looks just like this, but it's not this rayon awesome material. So if you guys are interested, again, Katut, one of our regulars, she's on the show all the time. Not here today because she's in New York, but she works with capbali.com. You can find him on Twitter at capbali as well. That said, you guys know my email. It's twitter@tradermerlin.com. Lee says it's time for the 10 rule refresh show. All right, I'm fine with that. I do believe, let me just check my calendar real quick because I know I have guests on for next week. I just can't remember who I have on. I have John Rowland on Monday, I believe, which is going to be awesome because we're going to talk natural gas. That's big. Natural gas has been all over the place, and I believe, I got to go back and watch the archive, I'm pretty sure that he was on this program saying, I'm very bullish on natural gas. Very. And I was like, oh, okay, I want to know more about that. And man, I kind of wish I would have bought some UNG back then. Let me see, just for next week so I know it. Yeah, John Rowland is going to be on Monday's program. And then I think I've got Brandon Wendell on Tuesday. So there we go. What else we got? Trying to mastermind, but the server is dead and no one really? Bummer. Oh, thanks, man. I appreciate it. Yeah, you know, it's funny. I had one person kind of give me a hard time about it. Like, one person OTA was like, why are you doing that show? And I'm like, well, A, I love doing it. And it's not like I'm doing it for the money. I mean, it's nice. It would be great if I was making money. But when you enjoy a topic like trading and investing and you have a nice community like you guys, it's fun to do this stuff. So I'm glad you guys appreciate it. I appreciate it as well. Especially appreciate when it's Friday because I have a nice little cocktail. I'm going to go for a walk with the dog, watch the Dodgers get destroyed, and it's going to be a great weekend. All right, everybody, that's going to do it for me. If you have comments, questions, feedback, let me know. You can email me at tradermerlin@gmail.com. That's the easiest way. Put your comments down below the video. Obviously, hit the like, whatever you guys want to do to help promote. That's always appreciated as well. Again, thank you all that sent in donations today. That was very nice of you. Walter, I appreciate that. Rob as well. Pull the trigger, my friend. Just start small. NJ, thank you as well. Les Gold, you guys have been awesome. The rest of you have a fantastic remainder of your week, and I'll see you Monday with John Rowland talking natural gas. Take care.